I don't know if we're past maximum pain. You know, I think that there's still risk that the economic consequences are going to cause markets to be hesitant, but it's going to be hard to match that fear again. So I think a structural low did take place.
Stocks are attractive, but uncertainty is still the name of the game, and it's going to persist.
Yeah, I think it's going to be hard to match that level of fear again. So I think we're probably past peak uncertainty. I mean, even with this Fed controversy, but I think that there's a chance we could be drifting dangerously close to that again. Bitcoin earlier this year may have been struggling with some of the deleveraging that was happening for institutional investors.
Just selling what they could.
Yeah, selling what they could, and I think that suppressed Bitcoin, especially over weekends. But now that deleveraging is done, I think that Bitcoin is going to catch up to gold, and you know, Bitcoin's old high was over 110,000. So I think there is a lot of room to catch up as a sort of non-dollar asset.
Tom Lee discusses the ongoing uncertainty in the markets, acknowledging that while economic risks persist, the worst fear may have already passed. He believes Bitcoin is well positioned for a significant rebound, especially after institutional deleveraging. With Bitcoin's recent struggles behind it, Lee anticipates it catching up to gold and potentially reaching new highs. He points out that Bitcoin is now being treated more like a risk asset, meaning if the market recovers, Bitcoin is expected to surge along with it. The growing adoption of Bitcoin, especially with developments like Bitcoin ETFs, is reshaping its role in the financial ecosystem. Major institutions are increasingly buying Bitcoin, signaling its rising legitimacy. Lee remains optimistic about the long-term outlook, suggesting that Bitcoin's role as a non-dollar asset could become more pronounced. With traditional companies such as Apple and Amazon likely to acquire Bitcoin via ETFs, the cryptocurrency is poised for even greater growth.
Does the S&P have a closing bear market low from here? What are we down? 14% now, something like that.
Yeah, I mean, 4,800 was the low we made a couple weeks ago, because there's still probably a lot of investors sitting on their hands and there's uncertainty. But on the flip side, I just think that we have to keep in mind that one, companies are very resilient, and we'll learn about it during earnings season. But we could have a positive policy shock as well.
Like a backing off of some of the tariffs? Yes,
we could have something that the market sees as a win. Whether it's going to be one of the 15 countries that we have a trade deal with, or a de-escalation with China, which of course overnight didn't seem like that was a possibility, but there is room for a positive policy shock. U.S. and China have absurd levels of reciprocal tariffs at the moment. And if you believe those are in place, then the global economy is in trouble and you should be bearish. We know markets have gotten very pessimistic. They've priced in a 60% probability of a recession. If tariff negotiations de-escalate, then the probability isn't that high. So I think that there's still a big window for markets to have a large rebound, but it's really the path of this de-escalation.
We're in a bear market. I mean, we're in a bear market, right? It's like so many stocks got just absolutely destroyed before this uncertainty happened in the market.
Yes, I mean, if we define a bear market as stocks feel like a grind or you're losing money, I'd say it really started in December because markets were churning even through the February high. But if I was to define a bear market as unleashing a type of financial tightening that leads to a recession, but I think it feels like a bear market for the average person. I mean, I think there's sort of two brains people are fighting. One is the tactical brain, which is, look, they want to know if this is a bottom, and they want to be convinced of it by seeing stocks rally on bad news. But if someone had the investor hat on, and that's the long-term brain, I have a lot of confidence the U.S. companies are going to navigate through this treachery. Stocks are hugely oversold because you never really lose money buying the VIX at 50, or when the percentage of stocks above the 200-day drops to 15. Those are almost guarantees of positive 1-year, 3-year, 5-year returns. So it depends which brain you're wearing today, but I'd say the majority of our clients are trying to be tactical. But if this is a matter of who makes the overture first or blinks, but we know it de-escalates, then I think the downside it comes off dramatically, and I think stocks can actually do really well into the rest of the year. But yes, I would be buying stocks today. One of the things we did for our clients last night is to look at what's called, Walter Deemer calls sold out stocks, which is worse than oversold. Sold out stocks don't go down because there's a lot of bad news priced in. There's a lot of stocks that didn't make new lows on Tuesday, April 8th. They made their lows a month ago, and they had lower volume on April 8th. Those are what I'd call washed out stocks. A group that I think's washed out is the Mag 7. So I'd look at Mag 7 as a place to really expect a rebound, including stocks like Tesla.
Okay. We're left with the rubble, decision making in the White House. And the damage has been done. CEOs have no visibility whatsoever. Do you see this consumer sentiment number today?
Yeah, they're awful.
Do you see where inflation expectations are?
Yeah, they've gone bananas.
Do you see what earnings expectations have done recently?
I mean, there's no ability to make guidance.
So what if the damage is already done now?
That's right. Now, we have to keep in mind this has been 10 days. So it is a shock, a high-amplitude shock, but only of 7 days, so someone can restart the patient's heartbeat. I think that the White House is now keenly aware that Main Street can't handle a huge deleveraging because it is going to lead to job loss, and he's listening to CEOs. So I think there's a really big window to repair the bulk of this damage. And at the other side of this, of course, is that we have reciprocal tariffs in place that are acceptable. We have tax policy that's changing and less regulation. So I actually think the 2026 outlook is still quite good.
Tom Lee believes the market is past its peak uncertainty, with Bitcoin poised for a recovery after a period of institutional deleveraging. He sees Bitcoin catching up to past highs, especially as it becomes more accepted as a non-dollar asset, like gold. Despite ongoing risks, Lee remains optimistic about Bitcoin's future performance. Lee also points out that major corporations like Apple and Amazon are likely to acquire Bitcoin through spot ETFs, boosting its legitimacy and influence. This shift signals Bitcoin's growing role in the financial system, with Lee confident it will continue to reshape the global economy.
I think there's a call at work and a couple of puts. I think that there is a Fed liquidity put by the Fed.
When Collins said what she did?
Exactly. And we know the Fed put on rates strikes much lower. The White House has a policy put because we know that you can't brinksmanship the global economy to a halt just to try to get China to blink. And I think that the call is, I think there's a negotiator call, which means I think the White House exercised the Navarro call and replaced him with Besson. I do think markets are getting a little desensitized.
That's what I mean, yeah.
Yeah, and I think part of it is if someone had an investor hat on, not tactical hat, really good opportunities are emerging because the number of stocks below the 200-day moving average was like 15%. Historically, that's a strong buy signal. I mean, you're going to find a lot of bargains there, and the VIX got above 50, and it almost always pays you to buy the stocks when VIX is above 50. But in the near term, it's a roller coaster. I mean, it does feel like we're having a lot of zigs and zags, and even over the weekend. But to me, I think everything that happened over the weekend, including the Sunday further explanations, all of this is still unequivocally positive for stocks. I think that if we didn't have to consider tariffs, inflation is definitely tracking below expectations.
I mean, where the Fed wants it, almost.
Yeah. I mean, core inflation month over month at 0.00056. I mean, that's like literally hitting a wall.
Now, is that for good reasons or for bad reasons?
I think it's for the right reasons because...
Oil?
Yeah, well, there's oil and foods off the boil, but it really is shelter is actually cooling to a 2% rate, and that is what you need to get inflation back down to 2.
Do you, at this point, foresee the worst-case scenario in terms of dollar declines, 10-year yields due to people the Journal had an interesting piece today that it doesn't need to be that people just abandon the dollar and abandon the United States to invest in. It's just on the margin because it's a given that you cannot ignore the United States as the elephant in the room globally for all these things, for the currency, investments. But on the margin, it could make a big difference if there was even a slight lessening of what we were used to.
Yeah, I agree. I think that is the narrative at the moment, that U.S. exceptionalism's over and people are selling treasuries and dollars to buy other assets. But I'm not in that camp that it's sustainable, because unless weaker dollar and higher yields suddenly makes the best companies in the world outside the U.S., the best and the most important companies in the world are American companies. They've produced the best shareholder returns. And, if you look at the S&P, 40% of the returns of the S&P come from new companies every 10 years. Is there going to be suddenly the best new company coming out of Europe instead of the U.S. because of the dollar? And I doubt it. And I think U.S. companies are going to adapt.
Tom Lee believes we may have passed the peak of market fear, with stocks becoming attractive and a potential market rally ahead. He highlights Bitcoin's recovery now that institutional deleveraging is over, expecting it to follow a similar upward trend. Lee also sees possible policy changes, like tariff adjustments, that could boost the market further. Lee remains confident in Bitcoin's growth, especially with major corporations acquiring Bitcoin through spot ETF. This institutional adoption could drive Bitcoin's rise, detaching it from traditional economic influences and increasing its influence on global finance. Do you agree with Tom Lee's Bitcoin prediction? How do you think Bitcoin's adoption will change traditional finance? Share your thoughts in the comments.